Welcome to Fibonacci's Traders. I hope everyone had a relaxing weekend. Today, we're diving into what's shaping the markets this week. After Friday's strong jobs report rattled the market with selling pressure, we've entered a new phase where expectations for interest rate cuts are dwindling. While strong economic data is generally positive, the market tends to dislike it in the short term, and we'll unpack why that's the case. We're also going to touch on key events to watch this week, including macroeconomic updates, earnings reports, and what this means for key growth stocks like Palantir, Nvidia, and AMD. So, whether you're a seasoned investor or just starting out, there's plenty to unpack. Let's get started. The U.S. economy posted a strong jobs report last Friday, which was better than analysts expected. While this may sound like good news, and it is for the economy, it has significant implications for the Federal Reserve's stance on interest rates. Markets were hoping for more clarity on rate cuts, but now those hopes are fading fast. Investors are adjusting to the possibility that rates may remain higher for longer. Some banks are even speculating about potential rate hikes later in the year. This uncertainty is causing significant volatility, especially in growth-heavy sectors like technology and semiconductors. Let's talk about how this volatility is impacting some of the biggest players in the market. Nvidia, AMD, Intel, and Broadcom all saw declines on Friday, driven by macroeconomic concerns. Nvidia was down roughly 3%, AMD fell by nearly 4.7%, and Intel and Broadcom slipped between 2% and 3%. The semiconductor sector is often sensitive to interest rate expectations, and this was a clear example of that. Palantir also felt the heat, with the stock showing additional downward pressure in the overnight markets. It's hovering around the mid-$60 range, and while some analysts argue the stock is overvalued, others see it as a potential buying opportunity at these levels. It's a textbook example of the tug-of-war between bulls and bears in the current environment. This week, we have a packed schedule of events that could influence market sentiment. Major financial institutions like JP Morgan, Goldman Sachs, and Bank of America are set to report earnings. Additionally, big names like Taiwan Semiconductor Manufacturing Company, TSMC, and United Health will release their results, which will offer more insights into their respective industries. Perhaps even more critical is Wednesday's release of the Consumer Price Index, CPI, for December. The CPI will give us a better understanding of inflation trends, which will further influence the Fed's stance on rates. Sticky or rising inflation could lead to additional market pullbacks, while any signs of cooling could stabilize things. Housing data, including building permits and housing starts, will also be released, adding another layer to the macroeconomic picture. Let's take a closer look at Nvidia and AMD, the giants of the semiconductor world. Nvidia recently saw a strong run-up thanks to its leadership in AI and GPUs, but its stock has been volatile, particularly during events like CES. Nvidia briefly touched $150 before pulling back to the $135 range, showing the uncertainty that dominates the market right now. Similarly, AMD continues to navigate market challenges but remains a critical player in CPUs and GPUs. The broader semiconductor market is grappling with fluctuating demand, geopolitical concerns, and regulatory shifts, making it a focal point for both risk and opportunity. So, how should you approach the market during periods like this? First, don't panic. Volatility creates opportunities for long-term investors who can stay disciplined. Consider these strategies. Diversify your portfolio. Avoid concentrating too heavily in one sector or stock. Spread your investments across industries and asset classes. Dollar cost average, DCA. Regularly invest a fixed amount regardless of market conditions. This helps mitigate the impact of short-term price swings. Focus on fundamentals. Look at the core strength of companies. Do they have solid cash flow, manageable debt, and strong growth prospects? Nvidia and AMD, for example, are leaders in cutting-edge technologies with long-term growth potential. Stay informed. Keep an eye on key indicators like inflation, interest rates, and earnings reports to understand where the market is headed. As we move through this week, expect more market swings driven by earnings and economic data. The uncertainty may persist, but with the right mindset and strategy, you can navigate these challenges and position yourself for future gains. Remember, patience is key, and corrections can be opportunities in disguise. Let me know your thoughts in the comments. Are you planning to buy the dip on Nvidia, AMD, or Palantir? Or are you sitting on the sidelines waiting for clearer signals? Share your strategy and let's keep the conversation going. Thanks for tuning in, and I'll see you in the next one.